Thank you, Francois, again. And hi, everyone. My name is Martin from Bloomberg NEF, and I'll be talking about opportunities in hydrogen. And when I came for the lunch just before this session started, some of the attendees who are sitting in the chairs here today asked me, "So you're from Bloomberg, are you going to give us bad news or are you going to give us good news?" And I said, well, good that you're asking, because the first slide I have starts with the good news. So what's the good news? There's been plenty of good news from what we can see on the hydrogen market. The first piece of good news is that more and more countries around the world are creating hydrogen strategies in order to meet their net zero targets. As of July, this was 44 countries. Today, we actually updated the number. 52 countries now have a hydrogen strategy. And these strategies are leading to real projects being developed on the ground. So we've seen the electrolyzer deployments double 3 times in a row. We saw it double in 2020 to 21, 21 to 22, when we almost reached 1 gigawatt for the first time. This year, we're expecting about 2 gigawatts globally of electrolyzers to be deployed. And we're expecting another doubling in 2024. So 4 doublings in a row. The market is clearly growing. And it doesn't stop there. We see plenty of projects in the pipeline in our database that have been announced. Of course, many of them may not be developed as planned or when planned, but it shows the massive ambition, about 150x the size of the projects that we have in our database compared to what's already been built by the end of this year. Now, many of these projects may not be built, others may be announced, but clearly the ambition is there. The costs of renewable hydrogen, now those have not been coming down as fast as we would have hoped, but we are starting to see a light at the end of the tunnel. The cost of solar is finally coming down now. We expect wind costs to start coming down as well, and with that, the costs of electrolyzers as well. We expect green hydrogen should become cheaper than blue in the vast majority of countries that we've modeled. It's about 30 countries that we've modeled by 2030, and by 2040 in vast majority of countries, even cheaper than gray hydrogen. So plenty of good news. Now, a little word of caution, which I have said at previous conferences as well, which has to do with electrolyzer manufacturing. We see a lot of, globally, we're seeing a lot of projects, a lot of factories announced to assemble electrolyzers. So even at the end of 2022, when you sum up the entire global capacity, it was about 13 gigawatts around the world, compared to that 1 gigawatt that I mentioned was installed that year. At the end of this year, this number is going to grow to more than 30 gigawatts per year of manufacturing capacity globally, compared to about 2 gigawatts of electrolyzers actually deployed this year. So clearly, on a global level at least, there is a very large discrepancy between, on the one side, the amount of electrolyzers that are being built, and on the other side, the amount of electrolyzers that could theoretically be produced if only somebody actually would buy them. This is going to grow. The capacity for electrolyzer manufacturing is going to grow based on the announcements that we have seen to more than 50 gigawatts per year. So what can European manufacturers do? Well, the good news that we have seen is that most of this capacity today is in China. Much of the plant capacity is also in China. And from what we've heard from European developers, from European banks, there is a very strong preference for domestically manufactured electrolyzers. So something that we've heard from our speakers today. And so long as that continues, then maybe it's the Chinese manufacturers that will not have their factories running. For the moment, the Europeans seem to be insulated from this Chinese competition. Let's see how that continues. So the previous panelists talk a lot about the carrots. So let's talk about funding and carrots. And this carrot, the size of the carrot globally, has been growing quite substantially. We now measure more than $280 billion worth of subsidies. That was actually 2 months ago. Now it's more than $300 billion worth of subsidies when we updated this chart just this morning. That's about 50% growth on just the beginning of this year, more than doubling on the year before. So the size of the carrot is clearly growing globally. Most of this funding is available either in the Americas or in Europe, not much in Asia for the moment. So how does this compare across countries? The US is the biggest supporter thanks to the Inflation Reduction Act, with European Union and its member states being also large funders of hydrogen. Actually, if you stack up the EU and all the member states, it's not that much less than what the US is offering. But how does the EU and the US, how do they slice up that carrot, as those panelists before me were saying? It's quite remarkably different. So in the US, in North America in general, in Canada, the funding is, vast majority of the funding is very simple. It's tax credits, which anybody can apply for, anybody can receive, so long as they meet a set of criteria, which of course haven't yet been disclosed, but so long as they meet that set of criteria, they can receive that money. Whereas in Europe, that funding is very often grant-based, which we've also heard before my presentation today, which has been slowing down some of the projects on the ground, delaying those FIDs, as we've heard in the panel before me. There's one final way in which this carrot can be sliced, and that is to look at where in the hydrogen value chain is this money going to, these $280 billion. And if you look at this, the vast majority of it is actually going to the production of hydrogen, and not necessarily to the use of hydrogen. So the buyers of that hydrogen aren't getting really all that much money. Now, Europe is clearly leading on that front in terms of being pretty much the biggest supporter of hydrogen demand globally. But it's quite obvious that that is an area where we will need to work on, this hydrogen demand and support for hydrogen demand. So speaking of hydrogen demand, who is going to use the hydrogen, or who should be using the clean green hydrogen that we will be producing? It's really going to depend on the policies that we have. And the most important policy that the EU is clearly leading on is having a carbon price, because that makes hydrogen competitive against fossil fuels and also against hydrogen made from fossil fuels. So what we're showing here is the carbon price in the European Union, the UK, other countries, and the carbon price that would be needed in order for hydrogen that costs $2 per kilogram to outcompete fossil fuels in the production of steel, in the refining of oil, and all the other sectors on the chart. And it would almost appear as if by 2030 in the European Union it will be competitive to use green hydrogen to decarbonize steel production, maybe even oil refining. But the challenge is that none of these sectors today pay the full carbon price, because they get free allocations for their carbon price, for the ETS. Now, we know that that is going to be phased out with the CBAM by 2034, but even until 2030, it's still not going to be phased out enough to really drive hydrogen demand just from the carbon price. So something else will also be needed, and Europe has that too, which are quotas or mandates for the use of hydrogen in sectors like industry and transport. By far, these are the biggest quotas that we have seen. There are also quotas for clean hydrogen, as opposed to gray hydrogen, for example, which is what they have announced and implemented in South Korea at the moment. But they will, of course, not be enough to get Europe to adopt 20 million metric tons per year of green hydrogen, as is planned in the REPower EU package. So something else, something more will be needed in order for the EU to be able to meet this 2030 target. So which sectors will be the biggest users of hydrogen? This is our modeling for net zero by 2050, our New Energy Outlook 2022. And it's quite clear that there's a dichotomy between electrification on one hand and hydrogen on the other. Those hard-to-electrify sectors are going to be the ones that use the most hydrogen, whereas where electrification is relatively easy, that's where we're much more likely to see large adoption of electric vehicles, electric heat pumps, etc. So it's going to be industrial sectors like steel that will be some of the largest users of hydrogen, also aviation and shipping. Three other sectors will use a lot of hydrogen. Those are the ones that use it today. So that's oil refining, ammonia production, methanol or chemicals production, and they will just need to shift away from gray hydrogen to green. So those will be the biggest users of hydrogen in a net zero scenario. So this is our net zero scenario for 2050. Assuming that we reach it globally, we would have about quintupling of hydrogen demand to about 500 million tons per year. The biggest users of that hydrogen is we call that the energy industry, but those are the three industries I talked about: ammonia, oil refining, and chemicals. Then we have steel, some aviation, shipping, and also power generation, especially for seasonal balancing of renewables. In total, that's more than $3 trillion of investments just into the hydrogen part of the supply chain, just not including any of the renewables, not including any of the steel plants, just the hydrogen part is more than $3 trillion of investment opportunities. I'm also going to end this presentation with good news, and that is that we are actually seeing some FIDs. We are actually seeing some projects being closed or very close to FIDs as we speak right now. We have seen oil refiners deciding that they will procure hydrogen in the EU. We have seen ammonia or fertilizer producers make similar decisions, and of course several steel projects are very close to reaching final investment decision and producing that green steel from hydrogen. We've also seen power generators in and outside of Europe. We've seen aviation industry buying eSAF, and we have seen shipping industry, as we've heard today, willing to buy methanol. We have seen some of the biggest orders of methanol ships. We now count more than 170 methanol ships having been ordered by the shipping industry. And even that methanol is starting to be procured, as we've heard in the panel today. So I'm going to end with 3 key messages from my presentations. And they are the following. The first message is that hydrogen is a key lever in reaching net zero. So net zero is very important if we're going to scale up hydrogen. And it presents an opportunity in the trillions of euros. But to get there, that's message number 2, we're going to need to see more incentives for hydrogen offtake. So that's the carrot going to the users of the hydrogen in addition to just to the producers of that hydrogen. And these incentives should ideally be simple, which I think we've also heard in the panel before me. And message 3 is we are moving from talk to action finally, but more action is needed in order for Europe to meet its ambitious goals. Those companies I showed previously, they are the pioneers. And of course, in order to reach those goals, we're going to need more incentives, and those should be simple. So that's my messages. Thank you very much.